Maverick traders, welcome out to this presentation on trading the oil price spike. Oil, energy, I don't know if anyone's been more bullish than Maverick on energy's price move. We talk about it seemingly every week in our trading room. It is the lone holdout. It is the sector with strength. It is so good, but all good things do come to an end eventually, and that doesn't mean that it has to collapse in price, but we need to go in with our eyes wide open and kind of say, okay, well, where is it at in the cycle, and where do we go from here? So to start, I'm going to bring up Google Finance and just talk about fundamentals a little bit. When you think about fundamentals of a business, of an economy, a lot of people refer to comparables. How does it compare to prior quarter, to prior year, and so on? And this is one of the reasons that energy is so good. Energy is one of the, well, it's the only sector that comes to mind for me that's guaranteed almost in 2022 to have positive comparables, meaning that they're going to make more in revenue this year than they did last year, that they're going to make more in earnings and profitability this year than they did last year. And that's not true of everyone. In fact, a lot of companies, that's not going to be the case. They're going to have lower. In fact, here's probably a good way to do it. If I pull up the NASDAQ earnings calendar, whoops, NASDAQ earnings calendar, where is it? Okay. So here's at the NASDAQ, they have the earnings calendar, and this is always a good thing to click on, and you can see how companies expected to report. We're just on today's date. What's the consensus estimate from 14 analysts that follow Salesforce, and here's where they're at. They're expected to earn 34 cents per share compared to last year at 74. That is a bad comparable. And if you just go down the list, most of these, so HP is a little higher, but look, from profit to loss, from loss to bigger loss, from loss to bigger loss, from loss to bigger loss, and so on. And so here's an energy, well, better. Okay, almost the only sector where you'll consistently see positive comparables will be the energy sector. So if I go back to Google Finance and you look at some of these energy companies, Occidental Petroleum has been making big moves to the upside and big news because Warren Buffett and Berkshire Hathaway has been buying aggressively. Now, remember that they were buying at lower prices. They started buying aggressively in the 40s and 50s and such, not at 72. So it's a different number today than it was when they first started buying, and where we were more bullish, by the way. Are we as bullish here? Well, let's talk about that together. But here's the point that I'm making with fundamentals. Fundamentally, are these businesses getting better? Yes. Revenues, quarter over quarter over quarter over quarter. And look at 2022, booming. Look at profitability, negative to slightly positive to better profitability to better profitability to booming profitability. How much so? Well, how about revenue increasing 57% year over year? And how about earnings going up by 3,000%? And if we looked at the annual numbers, it's not going to display this year's. You can see last year it was an increase, but look, we can make it an educated guesstimate. We can say, okay, last year they earned 2.3 billion on about 26 billion in revenue for the entire year. Okay, the whole year. So let's write those down. 26 billion in revenue for the year, 2.3 billion in earnings for all of last year. Just in one quarter of 2022, where are they at? How about in one of four, they've already made 8.35 billion in revenue and 4.88 billion in earnings. This was their full year number last year, and in one quarter, one of four, they've already beat the earnings handily, and the revenues, if you multiply 8 times 4, you're going to get above 26, right? You go 8 times 4 and you're at 32 billion in revenue, and they'll probably beat that. But is revenue going to go up? And earnings have already smashed last year just in one quarter. It speaks to fundamentally that this is the one sector. If I said, well, in tech, is tech going to have higher revenues and higher earnings in 2022 than 2021? We'd say, well, I don't know. It's going to be close. And if we said consumer, no. And if we say, industrials, no, not necessarily. But energy, it's a clear cut yes. And so markets will, factor in improving fundamentals. And these are big time improving fundamentals. That's been part of the story and part of why this area has been bullish and booming and so on. So that's kind of the fundamental take, right? When you see companies that have this type of increase in profitability, well, that does a lot of good. Think about it if it was your company. If you're so far in March of 2022, you've already smashed all of last year's earnings, you'd be pretty ecstatic. If in your first 3 months, you've like doubled all the money you made last year at your business or in your home, what you typically make in a calendar year, you'd be pretty stoked. And so are they. They're pretty happy about that. So let's talk about why that's the case. What's happening? Well, here's a little bit of backstory behind oil wells and kind of structuring and business and so on. And I find this stuff fascinating. It's very simplistic example here, but basically you build this well on the land or in the sea, right? And then you send your drilling down and there's gas on top of oil, which is on top of water, and then there's the sand or whatever, and you're basically going down in there to pull it out. Well, there's different ways that you can do that. You can go horizontal drilling, you can go in shale, you can use all these different technologies and so on in order to do that. And each company inside of energy has a role to play. So inside of energy, energy is the big sector, right? So we call the sector energy, but really there's so many different parts of that. There's oil service stocks that rent out the rigs and all these different things. And there's exploration companies that go and search for it. And, there's big conglomerates like Exxon, Chevron, Conoco. They basically do all of the above. There's manufacturing. There are the extraction companies, fuel extraction. There's refiners. Once you pull it out, you got to turn it into take that oil and refine it down into gasoline and so on. There's distributors, the gas stations and such. So there's all these different elements of the energy group, right? Well, the reason I bring up kind of this simplistic explanation of how this sector works in the different industries is to explain what's really happening and why oil has boomed in the first place. It really you have to go back to 2020 and you have to say, well, what was happening back then that really fueled today? So we need to go back a little bit further on this chart to show this collapse in the energy sector. And this is 2020 and the collapse, and oil prices actually went negative. Now, some people didn't even know that futures could trade negative in price. You might think that futures go to zero. No, they can trade positive, they can trade negative, because a futures contract, this is probably something that's worth explaining to really talk about 2020. In a futures contract, you have a buyer and a seller, but it's two promises. This person promises to buy. It's not like an option. Okay, in an option, the buyer has the right but not an obligation, right? So when we trade option contracts, if I buy an option, well, I could exercise my right to own the stock, but I don't have to. I can let the option expire. I can choose to not exercise. But that's not the way with futures. Futures is this person promises to buy and this person promises to sell. That's how a futures contract works. And the reason they call them futures is, well, they're out in the future, right? So we could be trading an August future. If I go and buy an oil future, I'm making a promise to buy oil at 1 barrel, or whatever. And this person's promising to sell oil 1 barrel, right? And we locked in a price, and maybe the price we agreed upon was $100. So I promise to pay 100, and he promises to sell and deliver the oil. That is promise by promise, and that's how futures work. It's not an option where the buyer can walk away. It's a promise. And so these have delivery of the commodity. And the reason it's a commodity is, well, they're commoditized. Like one can replace the other. 1 barrel of oil is just as good as any other barrel, right? It's just a commodity that it's filled with oil, and any barrel is as good as any other. So theoretically, at this delivery date, this person will deliver on their promise, and they'll send the barrel of oil, and I've already spent the money. I sent them a promise and some money, and we've made a delivery. And there's actually delivery locations where you'd have to go and pick up your oil and so on. Well, what happened in COVID 2020 was a collapse in the demand side of oil. Demand destruction, as we call it. So basically, nobody was flying. Everybody said, forget about it. I'm not traveling. I'm not, doing any of this. And they hunkered down. Airlines stopped flying, cars stopped driving, etc. Well, when that happens, there's a huge amount of supply, right? They've got all these rigs going and all of this oil being produced. And OPEC and all these governing bodies are arguing about, well, do we cut production and so on? It's expensive to shut down a well. It's not like you just snap your fingers and stop. You got to shut things down, and then there's a whole big process and expense to ramping back up, right? So these are big decisions. But basically, oil prices collapsed. And they went negative. Why? Because these people didn't want to fulfill their promise. They were willing to pay. Not only did they pay money to have the ability to buy that oil, but they paid money. When it went negative, they paid someone else to take the oil instead of them. It got as bad as like, negative 30 or whatever it was. That's literally people paying money for somebody else to take the oil. I don't want it. I don't have any place to store it. It will spoil. It'll cost me money to go pick it up. I'll pay someone else. And it went negative because there was that much lack of demand. All of the rigs, sometimes there's an arbitrage play where people will rent rigs and pile oil up and just float it out in the sea or whatever, because they can buy it cheaper and sell it more expensive, and all they have to do is kind of let it float there and then deliver at a later date, and they can make a little money, a little arbitrage. But none of that was available. Basically, all of those were filled up. There was nothing. You would have to, remember the pictures where the milk companies were out just pouring milk and wasting it in Wisconsin, because they had no place to get it and to get it all the locations and so on and so forth. So they just had to spoil it, and they just had to pour it out. It goes bad. Well, oil, the same thing, after a certain period of time would go bad. So anyway, during that period of time, what do you think was happening? Well, there were bankruptcies. Big company, Chesapeake Energy, went bankrupt and went through a restructuring and so on and so forth. There were a lot of production shut down. There were a lot of people that worked in the oil industry that left and will never return. So there was a lot of destruction of the capability to produce oil. A lot of rigs were shut down. A lot of things happened during that period of time that created some of what's happening today. That literally part of why oil's booming goes back to this period of time in 2020. Because when you have a catastrophe like that, it sends ripple effects through, right? And so a lot of these companies that collapsed, well, they're no longer in business. A lot of the employees left and will never return. Well, that means that it's harder to produce oil in the future. We need employees, we need rigs, we need, area, we need government to allow it. We need a lot of different things, and that's not happened. And so, it's also the war certainly has had an effect. Russia, Ukraine. There's more news this morning that the EU is halting more of, oil imports from Russia and so forth. So there's a lot of these effects that's creating this. But the companies that were able to make it through, like we looked at Occidental, they're having a boom in profitability. Well, why? Because they're highly leveraged. The same reason their stock price collapsed here is the same reason their stock price is booming here. I'm going to compare it to, let's use a real estate analogy. One real estate investor goes out and buys a single property. And he says, I'm going to rent it out for the next 10 years and try to make some money on it. And, he feels like he can do it safely. Another real estate investor that makes the same amount of money as this guy, he goes out and he buys 5 or 10 properties or whatever. He loads up. And I don't know why these look like little Smurf houses or whatever, but, we'll just draw some quick houses here. Okay. And he buys 5 or 10. He leverages up. Now, he works, they both make the same amount of money. Well, who's better off? Well, it all depends. This guy has the very real possibility of going bankrupt, right? If things go bad, he's highly leveraged to this market, has a lot of his all of his risk in one. And if he doesn't get renters in here, if he can't cover it, if, all of a sudden they stop paying, whatever, he may go bankrupt, right? This guy can probably cover a lot of bad downtime. Now, if the market's really strong, though, imagine somebody did this 10 years ago, which spot would you rather be in? There was maybe a lot more stress here, but you'd like to have 5 instead of 1 because the market boomed and he was leveraged to that situation. A company like Occidental, they bought out right back in here. They did a huge buyout where they bought Anadarko Petroleum. They bought all their assets and paid for it and took on debt and so on. They did this. They leveraged up on the oil markets. Well, it was horrible timing. And, markets collapsed and oil went negative. And think about it from a company perspective. If it costs you, let's say your fixed cost is $40 per barrel to pull it out of the ground. That's what it costs you in expense. If oil prices go negative, you're losing money. Every barrel you sell represents a huge loss. I mean, imagine even if you were able to get $20 per barrel, you're losing $20 on every barrel you sell. And you have to keep selling them because you've produced them. They'll spoil. So 20 is better than 0, right? So they're producing this oil, but they're losing money for a period of time. Now, they did shut down some production. They cut expenses. They fired some people, right? Or laid them off or whatever you want to call it. But essentially, they tried to make it through and weather the storm because the rent wasn't coming in. They were in a bad spot. Anyone that played it safe, well, they were in a better spot during that phase. Fast forward, now that leverage is paying off handsomely. They were able to weather the downturn, and now they've got all of these assets producing more and more of it. And you think about it from the standpoint of now, they might have $40 a barrel in expense, but they're getting 110, 120 per barrel. And so that's why that profitability has exploded, because they're highly leveraged. And to use an analogy like real estate, It's like having a lot of properties and leveraging up. Well, if the property market is strong and house prices boom and you're able to get renters in there or sell at top dollar, hey, you're going to be very, very happy with the results because you're highly leveraged to that. Well, that's essentially what some of these companies, and especially someone like Oxy, is. They're highly leveraged to profitability if oil is booming. And if oil collapses, well, they're going to have the flip side of that. So you can see, maybe this is even more instructive if we go off of the log scale. You can see the bust and then the corresponding boom that's happening. Now, let's talk about where oil is at in the cycle. Here's the problem. So we talked about what's so good about energy. Well, look at this stock chart and look at the run it's been on. All good things come to an end, all good things need a breather and so on. And I'm not really convinced that oil is going to have some massive downturn. But I guess the question is, how do we trade it today? Right? It doesn't matter what we could have done in the past, and we've done, well. I mean, 2022, if you've been bullish on energy, you've done really well in that sector, right? But what do we do from here? And the way that I like to think about it is you can make things really simple by trading with the trend, but you also can't just say, well, anytime the trend is up, I should be a buyer. I don't think that makes sense either. We have to kind of think about it in phases, right? And if you look at any trend, there will be zigs and zags, there will be consolidations, there will be, upturns and some wiggle, and then maybe some crazy high spikes, some parabolic type of moves, and so on. And we have to kind of make sense of that along the way. Well, one of the best places to get into a trend is when you feel like it's early on. So one of the things that I kind of look for within trends would be some of these crossovers. In fact, let me create less confusion. Let's take off the longer term and just do the 2050. But whenever you have the 20 cross above the 50, that's kind of, hey, a new uptrend might be starting here. Okay, another uptrend beginning, or another uptrend beginning, or another uptrend beginning. And they're not all the same, but if you kind of look at them in where they are, there's a couple of different ways that these crossovers occur. One is where maybe the stock has been in a downtrend, and so the moving averages are kind of going like this. And then there's a clear kind of turn in them where they cross, okay? That would be the purest form of, hey, new uptrend just emerging. That's what that one is right here. I mean, that's a new uptrend is trying to begin, okay? It's just trying to start. That's a really interesting spot where, you could really take off. Sometimes you get the trend has been going and going and going, and these moving averages are kind of coming up like this, and then you get a little bow tie pattern. And a bow tie is just basically, it crosses, and it's just kind of choppy, and then it crosses right back up. Okay, and it just kind of looks a little bit like a bow tie. See, here's your 20-period moving average. Let's just keep highlighting this 20. And it kind of crossed below. Oh, we might be moving into a downtrend. No, just kidding. Back into an uptrend. So is that a 20 cross above the 50? Yes. Is it bullish? Yes. But it's not quite the same. And you had a couple of those. See this little bow tie kind of dropped and then it crossed back above. Here, bigger drop and then it crossed above. Here, little bow tie pattern. If I were saying, where are your bow ties? So here's how I would look at this in terms of trend and whatnot. Here's a brand new uptrend. Here's more of a brand new uptrend. Here is a little bow tie. Let's do a different color. That's a little bow tie type of signal. Here's a little bow tie. It kind of crossed below, crossed above. For For me, looking at this, when you have a deeper pullback, a little bit more of a corrective phase, and then you go back into a bullish cross. Here you had more of a corrective phase or a downtrend. It's kind of a triangular type of thing. It broke out. And then you start to go, these are really compelling new entry opportunities. It's time to really consider being a buyer for the foreseeable future. The uptrend has just begun. When you have a bow tie pattern, they can be really good, by the way, but maybe you wonder if it's just going to kind of be like this one, where it goes a little bit, but then it kind of fades off. It goes a little bit, and this one kept going. We don't really know how good it's going to be, but we know it doesn't have the run room maybe that the other one did, right? We've already been up a lot. Now we get a little bow tie signal. I think it's going to go higher, but I'm not super surprised it didn't have a whole lot to it. This one, if it had kind of faded off and consolidated after that initial spike or even turned down, I wouldn't have been super surprised by that. This particular bow tie was fantastic, right? It's kept going and going and going. But that's how I would look at it. New uptrend versus a little bit of a consolidation and new bow tie. All four of them are bullish. All four of them are, hey, I want to be a buyer. 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 And they're all somewhat early, either in a brand new uptrend, like these two, that's just starting, or at least a continuation of the uptrend, like these two. Hey, we went through a consolidation, we rested, but now we're starting once again. All four, more of the buy side. And you can make some money off of those, okay? Now, why do I bring that up? Well, they all trade with the trend, which is great, and they all get us bullish and should be somewhat profitable. Short term, intermediate term, even a little bit longer term. We can make some money probably on most of those. Here's the problem in the context. If I'm looking at this trend, where are we at? Well, we're about 4 or 5 months removed from the last bullish crossover. We've been ramping sharply higher, and oh, by the way, we're kind of going parabolic at this point in time. Should I be bullish just because the trend is up? Should I be rushing out to buy just because the trend is going higher? Well, for me, I think context is important. I do not want to be as bullish today as I have been in the past, right? That doesn't make sense to me. It's a whole different scenario paying 89 for the energy sector versus paying 55. Those are very, very different risk to rewards. Now, can it go higher? This doesn't mean I should short it either, by the way, but basically at a certain point in time, do I say, okay, this needs a breather, this needs some sort of consolidation, correction, what have you, and I'm just not a buyer here, and that's where I'm at. I actually took profits. I tweeted about it, but took profits in all of these, trades at the very end of last week. And by the way, they popped up a little bit more today, and I'm okay with that. I don't buy perfectly at the low and sell perfectly at the high, but I think energy has run its course, and the next thing you're going to see is a relatively good sized shakeout and correction. Now, it's not just technical, it's part what we would call sentiment. And this comes from experience and paying attention to the markets and just kind of getting a sense of where the market's at in sentiment. And the best way I know to kind of explain sentiment and how people feel about things is to just imagine that you're at a family barbecue or something, right? Sentiment, a lot of it is not so much about the informed, but the more uninformed investor or trader, okay? Sentiment is one of those things where the general public will usually be on the wrong side of sentiment at the absolute worst possible time. So if I were to go out and poll the public, the public hasn't been screaming buys on energy. The public hasn't been, you know, super loud and rowdy about energy and about, oil and so on. And hey, we need to buy the. No, it hasn't been that way. But has it really started now and mostly complaining about energy, you know? And the flip side of that is a lot of people in their Robinhood account are probably finally piling into energy right here. I look at this as late cycle because I think the general public has woken up to the fact that you know, inflation, for example, is one of the most Googled words right now in the financial vocabulary. And oil prices and gasoline prices and all these things are getting a lot of attention. And so the general public is now very much, again, at the late stage of sentiment. The general public is finally piling into energy. They're finally piling in. Were they buying it early on in the uptrends? Were they buying it out of consolidations? Or are they just buying now because they hear about how energy's booming and yada, yada, yada? That's how the public works, okay? It's kind of an uninformed investor decision. And from a sentiment perspective, do I want to be super bullish when the public's coming in? Absolutely not. That's usually that's like the ninth inning, right? Now, I don't know how the next few days are going to go, or who knows. Sometimes the public gets it right for a while, by the way, because it goes viral. Um, if this thing goes viral, meaning that not only does the public come in, but they convince more of the public and more of the. I mean, this thing could go viral. It has the potential to have like a crazy blow off top because the public's hard to predict. I don't know how many of them are out there and how wild this is going to get. But I do believe that the public is the last buyers and will probably somewhat be left holding the bag a little bit as energy not collapses, but has a real correction. My thought is it comes sooner rather than later. That, energy is probably going to have a couple of months of, some rough times. And it's not going to give back all the gains or whatever, but it could have a pretty substantial downturn. And the public will probably complain about that and say, well, they're just out to get me. The market, it's all rigged or whatever. But really, it's because they don't understand that they're the Johnny come latelys, right? They're just finally getting in because it's on CNBC every day. They need to be a little bit more informed than that. And so that I think is the next phase for oil. That I think is, if you think about it from a good news, bad news perspective, what I would anticipate is good news and bad price action. Is the energy complex gonna, is oil probably gonna stay elevated? Probably so. Are people gonna keep complaining about how much they're paying for oil at the pumps and so on? Probably so. That's not going away in the short term. Are the politicians gonna fight about this and so on? Probably so. Um, and I think generally from a trading perspective, so much good for the energy sector, but we may have a little bit of a bad price action type of event here for a while, and then it'll become interesting again down the road. But unfortunately, to my eye, I think we're in that last phase. So it if it goes higher, it goes higher without me, and I'm okay with that. So what do we think about, the markets? Well, this is where the markets become tricky and more difficult. Sometimes you got to circle back to some things that are unloved, that are not trading so well. And if we look at some other sectors, there might be some things that start to materialize here and give us some opportunity in the not too distant future that we rotate in on the bullish side. Like, it's not there yet, but I would think about something like financials or whatever. and do it as a comparison. We've been short most of the other sectors, bearish on them every week in the trading room, talking about negative score on this sector, negative score on this sector, negative score on this, positive on energy. But for me, I'm no longer, as of right now, I kind of think this is the end for energy. So I got to find new areas of interest. Well, what I think is coming is a bit of a low in things like this financial sector. And so this will be one of those new bullish crossovers, assuming we hang in here for a couple of weeks and even go a little higher in financials. You'll start to see this bullish cross. And it may have a little bit of its day in the sun as something like energy's in its corrective phase, what we would call a sector rotation. So I've got to double back and look at some of these other sectors that have been beaten down, and they might not be a buy setup yet. Or I might dig a little deeper within the sector and say, okay, well, maybe the group isn't there yet, but can I buy something in that sector that looks a little bit better? And so you can go through, your stocks. We don't need to be on such an extended time period anymore, and come back into a shorter time period and say, okay, not there yet, but as we just kind of look through some of these and say, okay, where are we at in the 2050 crossover and the opportunity? Okay, here's one that's approaching that, city, okay, that it's not happened yet, but you can see how it's starting to happen from bearish cycle to bullish turn. And maybe, for me and my money, that's the way I'm looking at this period in time. Where are we at in the process? I don't just buy in that sector because it's in an uptrend anymore. If I feel like it's in the late stages, then I remove myself from that sector and I got to go find something else on the buy side. Might not be, the best situation for the next day or two, because again, the public might pump up energy a little bit more in the short term, but I feel pretty good that most of the time my analysis on this type of thing is going to be pretty solid, and these rotations will happen in that way. So, if I'm looking at industrials, yeah, they've been beaten down. That most of these other sectors that we could look at, okay, demolished, down, down, down. But within that group, is there anything that's starting to reemerge, starting to get a new uptrend? And you just kind of go through and say, okay, what could I buy in these different groups that might be there? And most of these aren't, but some, you might stumble into one or two that's just started to develop a new upward trend and give you a buying opportunity. And for me, that's how I think this cycle goes, is there's a little bit of a rotation back into some of those other sectors, and we got to take some money off the table on the energy space. So anyway, that's kind of how I see this trade developing in the energy sector. I think it's time to start to look to lock in those profits in the energy group and look at some of these other sectors where we might be rotating. That's how we're looking at and trading the oil spike. Hope you've enjoyed it. Visit us at maverickTrading.com. Click subscribe to the YouTube channel for more content like this, and we will see you next time. Goodbye, everyone.